Folks, I'm going to try and make this as quick as possible because I seem to make the same video probably every 3 to 4 years because in every single bull market flush we have the same comments that suddenly pop out. I'm done with crypto, should have taken profits, I knew that translated left cycle was true, Siam and his stupid predictions, wish I listened to that bearish guy on Twitter, and any other, similar-ish comments. And typically these comments are born out of whether it's a knowledge gap or just they haven't developed the necessary emotional control that you need for crypto, and all of the above. There is a lot going on, but typically this is a geopolitically sparked temporary risk-off flush, and I have to stress that this is temporary. I know everyone's saying, Warren Buffett, he's now sitting on $250 billion in cash. He's just sold a load of Apple, yada yada yada. But if you look at that chart, he's been selling for a long, long time. You cannot you cannot invest by that Berkshire Hathaway cash index because he's been selling for a fair old while. And the thing is, this is not a liquidity reversal or a fundamental structural shift. So the only thing that would really scupper crypto properly is if there was a proper liquidity reversal or a fundamental structural shift. And none of that has happened. We've got new increased fears from the Middle East, which are then sparked off into the stock markets and also the currency markets. And this is just temporary risk-off flush. That literally is it. And Bitcoin has shown us this. Pretty much every cycle, every single cycle, I've had to make a very similar video, pretty much roughly around the same part of the cycle. It's not always in exactly the same bit, but here we go. So let's just go back. Okay, so here we have the 2013-ish cycle. It crashes for a year, then we have the sideways choppy accumulation phase, and we have that sort of bottoming out, which we tend to see. It rallies hard, and what happens is, look at this. We have the halving, and we have crazy volatility pre-halving, and we have crazy volatility post-halving. So about a month, and look at this. This was mid-July, we had that big sell-off, and guess what? Every man and his dog said Bitcoin's going to zero, all that sort of shizzle. But what happens is, this is just a tree shake. The strong hands know that absolutely jack shit has changed, and they pile up. And then it's off to the races. So then we have another cycle. So this is the 2017 cycle, rallies hard for a year, crashes hard for a year, sideways choppy accumulation phase for a year and a bit. Again, we have that nice rounded sort of bottoming pattern, just like we saw over here with this yellow bit here. It rallies hard, and then you have a fair bit of chop, and then the sell-off. Now, this sell-off, you can probably say, it's because it's COVID. I think, yes, there is an element that, this was COVID related, etc. And this was probably, at the time, you were thinking, nothing like this has ever happened before, businesses being shut down, all that sort of shizzle. Bitcoin's going to zero, what's the utility value of crypto, and Bitcoin, it's rubbish, especially when we're all in lockdown, yada yada yada. But so we had this general shift. Even if COVID didn't happen, I think something would have happened and this would have gone down a bit, maybe not as far. But look at this. This was pre-halving issues. Again, this is just a temporary geopolitical-ish thing. You had the halving, again, more months of fanning around pre and post halving, and then it's off to the races. So what's happening now? We had the same bottoming pattern, we had the same sharp run up, and all we're having now is that temporary distribution. So if you look, even my models, my original model. So if we zoom out here, my original model thought that at halving will be at $35,000. We're actually around sort of 60-ish. And then it would run up like this. But what actually happened is that, this same model, all I've done is just copied and pasted it just a little bit higher. I still think the highs are going to be around 200, 250K. But look at this. My previous model literally was looking for some sort of sell-off around this area. So, and again, that I just moved it backwards here. I was expecting some sort of sell-off. I thought the sell-off I was looking for was this move down here, and then, to be honest, I thought we had done the flush and that we were on the way up. So, obviously, I'm not Nostradamus. I don't have a crystal ball, but you know, models do repeat themselves because the markets repeat themselves, because humans are dumb chimpanzees that always do the same thing in all markets, in all assets, in all time frames. So that's why you can have a fuzzy crystal ball. I just thought this slide down was that flush that I was expecting, but it turns out it's this one. Oh, sorry, this one. So and this is where every single time you have people going, you know, this is some massive double top, it's gonna, you know, go to zero or whatnot. It really isn't the case. Has Bitcoin had most of its selling off? I think it probably has, to be honest. We nearly always see V reversals out of Dodge like this. Every single time we have some sort of V reversal because fundamentals haven't actually changed. Yeah, and the liquidity cycle hasn't changed. If we look at, so I've just done a cuddle, just trying to find a chart for you. So a cuddle is one of our big events. If we look at this one here, so Bitcoin and global liquidity go hand in hand. Liquidity, when that goes up, Bitcoin goes up. We've just had the beginnings of a spurt in liquidity, and we have a very correlated market between liquidity and the global market. So take this one, for example. Since the tech bubble crash, the markets have been pretty much in lockstep with global liquidity. And a big shout out to Michael Howell from Cross Border Capital. He literally does the best liquidity charts. And so even down here, about a decade ago, we had a correlation of 0.84. The correlation must be north of 0.95 now. The markets literally just do whatever liquidity says, effectively. So that's that. What else have I put in on my little ramblings? And then I have to go back to the smooth brain bullet points, which I created like in February time. So I've shouted off the rooftops endlessly that we are here just before the rate cuts. And the UK has just dropped rates for the first time in 4 or 5 years. And everyone else, you know, we've had this political posturing in the States that, you know, inflation is high, we can't drop rates, won't drop rates. And all of a sudden the prediction markets are now saying, a rate cut from the Federal Reserve is almost a guaranteed now. Whether it's 25 bips, 50 bips, who cares? I don't. This, you know, my bullet points here, which I constructed, I'm constantly trying to interrogate this and pick it to bits, but this has been solid. This is also predictive, and it has been predictive. So expect the Fed to cut, expect the ECB, the Bank of Japan, and the PBOC to start cutting over the next 3 to 6 months. So when that happens, guess what? We then have economic downturns, or the recessions. That's where it really starts starts to sort of play out. And then eventually we have the crazy stim pumps, and then crypto moons. So it's literally as simple as that. So if you are emotionally fragile right now and you're selling all of your crypto, you're going to massively regret this. Please, and I genuinely mean that. You will regret this, and I see this in every single cycle. What about the bigger metrics? So I don't want to turn this into an hour-long video because I literally went through all of this at the cuddle literally 2 days ago. So obviously, if we look at the VIX, this is the volatility index. For months, we've been saying that when we get into the green zone, the VIX always spikes, and it will always be due to some geopolitical bollocks. And guess what's happened? In fact, Thursday, 4 days ago or so, I literally said that we're still around here. Something's going to happen. We're going to spike into the red zone. And that's when policies start to change. Like, actually, we need to start cutting rates and pumping. So this is good. Again, this is the model predicting stuff, as always. So This will come back down like the VIX always does, especially with sharp spike ones up here. So yeah, it's risk off at the moment. So if you were to look at the secondary global risk index is Aussie yen. So Aussie yen is the canary of global risk, and we've had a pretty big sell-off. And typically the reason why Aussie yen is the canary of global risk is because historically Japan has been on QE oblivion and basically negative interest rates for the best part of zero or ZERP and NERP, so zero interest rate policies, and NERP, so negative interest rate policies, for the best part of 30 odd years. So what's happened is that sophisticated and big Japanese investors, they borrow from the Bank of Japan for pretty much nothing, and then they just look for an easy carry. And Australia has typically had high interest rates, so they borrow from Japan for free, and then they just invest it in Australia, and then they take that 2, 3, 4% arb. So when shit hits the fan, these deer in the headlights Japanese investors, they're very sensitive to risk off events. So what do? They take their money out of Australia, they go and they flee to cash, they go back into the yen, which is why you have Aussie yen doing this. But yeah, is it big? Yeah, it is. We're on the log chart here just to normalise stuff. But have we seen big old sell-offs in the Aussie yen before? Many times. Here's the last time, COVID. And then before we had sort of 2018, we had a bit of a spike. If we look at 2008, again, the biggest spike. But what is the common denominator here with Aussie yen sell-offs? You have some sort of very rapid V reversal almost every single time. So am I expecting a V reversal? Hell freaking yeah. Before we know it, we're going to be in a state of euphoria because rates are cutting, they're starting to print, and everyone's going to be thumb in bum, mind in neutral, happy as Larry, worrying about, oh my god, I'm making too much profits. This is a genuine scenario that will happen, folks. We will get into sort of, if we go back to my cycle here, we will get to sort of end of this year, Q1 next year, and you'll be pulling your hair out because you're making too much profit. You will feel like you don't deserve it, and then you'll start snatching profits early. And that, again, I'll probably have to make another video around January, February time. Don't pull your profits too early. So again, when we're looking at some of the other stuff, the US bank account still has a lot here. That's going to be drained at some point, and that will be one way that they can add liquidity to the markets without dropping in interest rates or printing. So this is just one of their ways. So that will be bled at some point. If we look at the spread, the 10-year spread, 10 to 2-year spread, if we get onto the weekly chart over here. So this is, oh my lordy. This is from about a year ago. I put in this sort of blue ghost feed, and the market has followed the ghost feed pretty damn well. And so look, this is just a continuing up here. So what I've said is that every single time we get into this circular bit here, this sort of 0.3% level, that's where the stock markets really start shitting their pants. That's where the recession really kicks in. And so all that's happening is that we're getting into sort of the the beginning of the crash. Now remember, crashes happen, they take 18 odd months. Pretty much every crash is 18 months in duration. So we're getting there. This is going up. Obviously it's happening a little bit later. I was hoping for a mini crash first, then we get all of the printing, yada yada, and then the big crash, sort of tail end of 2025. And that, that's still on the table, to be honest. If you look at the bigger crypto metrics, so obviously you have to look at the dollar. That is interesting. So when they start cutting rates, guess what happens? The dollar goes, wee! And obviously this is a regulated asset, so I can't share too much in terms of TA and forward-looking stuff, but I'm pretty sure, some would say, hey, this is a nice sort of topping pattern. And when the dollar falls, asset prices grow. So again, this is another thing which is pushing towards a temporary reversal. Everything's nuking. The Mang stocks are sort of all nuking, basically. Everything's gapping down. We see all sorts of people going, $1 trillion has been wiped off the markets. Yeah, again, it's just it's just a pullback. You have to understand that it's the Mang TM stocks, which are basically the S&P 500 these days, and they've all been melting up. So a bit of a pullback isn't a bad thing. Going back to the crypto type stuff, is Tether crashing? No. Okay, fair enough. So it's actually still going up. So this is still very bullish. USDC is, I don't really care about that. It's Tether really. If Tether starts pulling back in market cap, you got something to worry about. Look at 2022, for example. What about the hash rate? Is the Bitcoin hash rate plummeting? Let's have a look. No. Interesting. We could also extend that to things like Casper. What's the Casper hash rate doing at the moment? Crazy hash rate. So, the core fundamentals haven't changed, folks. God, sweet mother of Elon. We just tickled my hole here. So I drew this, not in April 2023. It was probably more... This was January 2023. So this is sort of 18 months ago. I started saying that the ETH Bitcoin pair would crash into this hole here, and then we'd have a massive spike up in Bitcoin dominance or market share. And then we've had sort of a teasing, the market's been basically teasing me. It's been getting near it, buggering off, coming back down, buggering off. And some people in my community go, that, Siam's, ETH Bitcoin circle will never fill. Well, here we go. Technically, it just tickled the edge here. I'm going to call that a win, to be honest. Is there more to come? Maybe, I don't know. But it was these levels I was expecting some sort of pullback and then a V reversal. Everyone loves that dominance chart. So here we go. This is effectively the inverse. So I was expecting that Bitcoin dominance or market share would hit around 60% and then absolutely die. Because this is when alt season kicks off. So we're getting there. This hole hasn't hit yet or filled, but we've got a lovely halo going on here on this chart. So, I'm pretty happy. When it comes to Tau, yes, I have to admit, I am kicking myself a little bit. So if we go into the daily chart, when I saw this double top here, I was actually thinking it's probably worth selling a fair chunk and just sidestepping for the moment. And I didn't do it. So again, this is where fundamentals can also screw over yourself short term in terms of technicals. So you have to imagine that the technical analysis and fundamental analysis are like bickering husband and wife. Sometimes the husband's right, sometimes the wife is right. The wife would say that the husband is always wrong, and vice versa. But so in this case, I had my two internal husband and wives bitching at each other, and I deferred to the fundamental spouse, so to speak. Went, no, just sit tight, do nothing, when I should have listened to TA, because TA was showing a bit of a move down. Whilst we're on Tau, everyone's looking at this. Oh, look at this head and shoulders. So one of the golden rules, it's a very basic rule with charting, is that when you see a massive pattern of some sort like this, and the technical eventuality of that takes it to below zero, it's an invalid setup. So everyone's going, oh, look at this head and shoulders. But when you look at a head and shoulders, you take the distance from the neckline to up here. So that distance is, let's call it $700 down to 2. That's $500 difference. So what this is saying is that it should take us from to minus 300. Technically, if that plays out, Tau goes to minus 300. So this completely negates it. This is not a valid head and shoulder setup. What's more likely to happen, the highest probability, is what we actually get is some sort of base, and that happens. Okay, so this is not a head and shoulders. It looks like it's massive. I know it looks massive. It's scaring a lot of people, but technically it's not true. So that's that. I haven't sold any Tau. In fact, no, sorry, that's not true. The other day in this circle, my R team community knows this, I sold probably about 2,000 Tau, and I put 2,000 odd Tau directly into Casper, because on the Tau Casper chart I thought, hey, this is a little pullback. I thought Casper was going to have a bit of a breakout, so I dumped 2,000 Tau into Casper because I thought we'd have this trap 5 breakout. So this is where obviously this call has been wrong. So this is unregular activity. So if you look at Casper, we've basically only got 3 cycles to really gauge on. So there's not much data. So basically we have, my normal numbers. So if you look at the fractal patterns which have been going on for ages, all-time high 1, double bottom 2, spring 3, retest bum 4. You then have a flat top compression, trap 5 around the previous all-time high. It then breaks out for 2 weeks. You have pre-high 6, then 7. These patterns follow out all the time. So yes, I guess I have been caught with my pants down because this is irregular activity for Casper. If you look at this, so I've simplified it here just so it's easy to see. It's always a 2-week breakout, roughly. So 14 days, 14 days, 15 days. I was expecting, something like 15, 16 days. Previously, it's been 121% breakout, 200% breakout, 200%. And I was thinking, something around here between 30 to 50. Now, is that still valid? Well, obviously, market structure is not just broken it, it's absolutely destroyed it. So can I blame geopolitical events? Quite possibly. I'm more interested in how does it affect the Casper fractal. So if you are following Casper and the fractal cycles, you should also follow Miko. He's got some really good charts. He's made some new charts here recently, which annoyingly I can't get my bloody WhatsApp to work because I saved all of my. I was texting Miko and he WhatsApped me some new Casper charts. I'm just trying to. I've got this bloody trying to log in, but my phone and thingy's not working. But anyway, I'll probably share them at some point. But if you just go back to this. Again, nothing has really changed. So where are we now? We're sort of end of 2024. I guess we are somewhat around the lower band. I mean, if we're looking at the price right now, 13.4. Where is that? 2, 3. So we're around this bit here. So yeah. So I'm still trying to get into my WhatsApp here. This is last attempt. Couldn't link device. Well, that's interesting. Right, okay, I don't want to waste your time. Let's move on. So, again, I haven't sold any Casper, and I'm just waiting because, we're not going to zero. This is temporary. Yes, we're all being slapped in the face a bit. If we look at my model over here, it would be nice to see a bit of a bounce here. So, I guess, this could be famous last words, but I'm not selling anything. I'm simply just sitting on my hands. If anything, I'm actually waiting for a bit of a bottoming out. Then I'm going to do some leverage derivative trades to go gig along. That's actually the thing I'm stalking right now. That's about it, really. I think most of these moves have sort of effectively played out, and it's an overall market nuke. Okay, so stocks are nuking. If we look at the S&P 500, that's going down pretty fast. So let's get out the log chart. The Dow Jones is nuking. The Nasdaq, the DAX, the FTSE, everything's nuking right now. It's not just crypto related. If it was just crypto related, then you've got to look at things slightly differently. But it's not, and because Bitcoin and ETH are nuking, everything else is also nuking. I saw some people go, Tau, the AI narrative, blah, blah. Just give it time. Next year, you'll see the AI narrative explode when you see Grok 3 come out, the new Llama. You've got ChatGPT 5 coming out. We've got the Tesla car fleet most of it turning into level 5 autonomous robo-taxis. In terms of capability, not necessarily legislation. And yeah, we've got all sorts of super clusters being built out. And what people don't realize is that AI is growing roughly between 5 to 10 orders of magnitude every 4 years. Every year it's growing roughly half orders of magnitude every year. And so yeah, like everything is nuking. You know, if you look at all the other AI type stocks, they're all crypto. Everything else is nuking. A lot more so than say Tau, for example. So I wouldn't worry. And even if you go to the legacy coins, the old legacy coins, ARB, puking, Link, Binance, Ripple, Cardano, Ton, Matic, like Doge, Solana. I mean, honestly, the list goes on. Like, this is yeah. Just wait for the Bitcoin to do its thing. It's gonna fill that hole, and then we're gonna see the reversal, just like the ETH Bitcoin play. So chill out, folks. Chill the hell out. What you should be doing right now, and this is not financial advice before someone tries to screw me over here. What I am trying to do, and what in my, if you sort of subscribe or agree to my investing mental models and whatnot, what you should be doing right now is trying to raise debt. You have to be rallying debt, borrowing as much money as possible, so you have dry powder to buy the lows. So yeah, I'm still trying to raise debt, and if I can, I will be pumping it straight back into crypto. So you do not want to shit the bed at this point here, when we are literally about to enter the green zone, which, you know, my models have played out. So hey ho, expect more short-term volatility, more punches to the face, and then yeah, insert that cheesy Rocky quote. Get punched, get back up, keep moving forwards. I hope this finds you well. Chat soon, folks.